Hello and welcome back to the Dividend Experiment, the channel that helps you build a portfolio that pays your bills. The content that we discuss is intended for information and educational purposes only and should not be considered investment advice or investment recommendation. Now, this pie has been so heavily requested by you guys that it almost feels as though there is a great amount of pressure to make this UK income pie. Inevitably, some people are going to be disappointed by it, but that's life, I'm afraid. And I said I'd make it if this post got 150 likes on it, and well, I got over 200, so there definitely seems to be a lot of interest in a pie like this. To be honest, my fear would be to make it, then it not being supported by the community, leaving me with an obligation to maintain it, but no real interest from you guys in me doing so. So getting this many likes was a big relief. And so before anyone asks, yes, it's a UK income portfolio. Yes, it's all UK stocks, as you guys specifically wanted to avoid the foreign exchange fees and fluctuations and changes. And finally, yes, it's being hosted on Trading 212. And talking of Trading 212, they're the sponsors of today's video. So if you somehow haven't heard of Trading 212 yet and want to open an account, or if you're recently opened an account within the last 10 days, then I have some good news. I asked Trading 212 if they could give me a unique code that you guys can simply type into the promo code section, capital at risk. So if you've opened a new account recently or planning to open an account, then here it is, DivXP or DIVEXP, short for the Dividend Experiment. So you have 10 days from opening your account to type this in and receive shares worth up to £100. I also get something as this is my custom code, so this helps you support the channel too. Worth trying it out to see if you can get a free share if you missed out when you signed up originally. Anyway, back to business. The UK Income Factory Portfolio. I'll give you an overview of what this pie is really designed to do, how I built it, and then we can go through the stocks in the holdings, or at least the stocks in the holdings at the time of making the pie. They may well have been slightly adjusted if you're watching in the future. Okay, so what's the purpose of this pie? I wanted to make a pie that would satisfy the never-ending requests of a dividend pie that was denominated in Great British Pounds for all the true patriots among you. So that was obviously the first criteria. All the stocks needed to be listed in the UK and in GBP. Next is that obviously it'll be an income portfolio, and that's what I do, generally speaking. I think it's incredibly unlikely that I'll ever make a growth pie, as I don't pick stocks for growth. If you're unclear about my own portfolio strategy, then I recommend you watch a video I made called the Metronome Portfolio. Now, this income needs to be at a relatively high level, as you can get 5.2% on cash with Trading 212 right now, at the time of making this video, so I need to at least hit that. Of course, there's a difference between investing in equities and dividend stocks and interest on cash, but that's a consideration anyway. I'm going to be using RUKD as a general benchmark, and the yield for that is about 5.4%, so I'd like to hit something similar to that so that people feel like it's a logical switch to make, bearing in mind that RUKD has a negative share price growth and an ongoing fee of 0.4%. So basically yield should be above 5%. On top of that, I want a positive 5-year AAR or 5-year average annual return. And it's all well and good getting an income from a high dividend yield, but it kind of defeats the object if your investment is essentially just being returned to you from your invested capital. And then I also don't want to take excessive risks with this pie, especially as it's made with a view for people that have been looking to copy it. So I also wanted to have relatively low beta, low volatility, and the stocks have to have relatively high market cap. So a lot of the companies on the holdings list you'll recognise as being from the FTSE 100. So that's pretty much the criteria. A relatively high-yielding portfolio with a positive annual return made up of larger cap UK-listed stocks that should be relatively stable. Let's see the breakdown. First, a heads up. The categories I'm using here might look a little unusual. They're the categories I started using in this video I made on stock market categorization. So let's see the breakdown of the categories in the pie. The biggest category is in banks and financials, which is pretty much expected for a UK-based pie. A lot of the UK economy is based on exactly that. Next up is energy and commodities, which includes oil and energy giants, as well as the big miners. So far, this is probably not surprising. Then we go to consumer necessity, which are all those day-to-day usage type products. Unilever heading up the main holding in this section. This was also my first big dilemma, whether to include tobacco or not. Obviously, tobacco stocks would pump up the yield to hit my desired kind of target area, but it might be a no-go for a lot of people. I ended up not including tobacco here, but if you wanted to add it to boost the yield, you could easily swap out some of the stocks in this section here. After that, it's utilities and infrastructure, fairly straightforward section and one of, if not the best natural dividend payer section. And then real estate, which was harder to fill than I thought. I much prefer real estate investment trusts outside the UK, generally speaking. Components and production, which is my twist on industrials, which has been extended in its remit, takes up 10%, but this might be one that increases over time, we'll see. Then we have 4% in pharmaceuticals and medical research, and 4% in innovative tech. The two stocks in this section don't strictly fit the innovative tech's description, but there was nowhere else to put them, so they can stay there for now. So that's the composition. Let's look at the stocks. I don't want to drag this out and go into great detail on every stock here, as you're probably familiar with them already, so I'll just read out the names and put the snowflake analysis from Simply Wall Street on the screen to give you an impression of the stock. Welcome to pause the video to take a longer look at any that I mention here. So first up, energy and commodities, and we have Rio Tinto Group, Glencore plc, Shell plc, and BP plc, Anglo American plc, and Sentiment plc. Moving on to utilities and infrastructure, National Grid plc, Greencoat UK Wind, SSE plc, and Renewables Infrastructure Group, United Utilities Group plc, and Pennant Group plc. Now on to components and production, BAE Systems plc, Coca-Cola HBC AG, Bunzl plc, and Mondi plc. Now banks and financials, which is a pretty big section here, Barclays plc, HSBC Holdings plc, NatWest Group plc, Legal & General Group plc, M&G plc, Aviva plc, Lloyds Banking Group plc, and Phoenix Group Holdings plc, and finally Aberdeen plc, or ABRDN. Then in the real estate sector, Big Yellow Group, Segro, Land Securities Group, British Land Company, and then the Shura. 7 stocks in the consumer necessity part of the portfolio, and they are Unilever, Associated British Foods, Diageo, and Tesco. Then we have J Sainsbury's plc, Tate & Lyle plc, and Britvic plc. Now we can move on to the penultimate sector, pharmaceuticals, and there are 2 stocks here, AstraZeneca and GSK, or GlaxoSmithKline. And the final sector is innovative tech, well, kind of, not really, and the 2 stocks here to make the full 100% of the portfolio are Money Supermarket Group and the Sage Group. And that's your lot. So the first iteration of the pie looks, or if you're still watching this from the future, this is how it looked, like this. 6.5% average annual return, which hits our criteria of positive return, which is good. There are 41 companies or slices of this pie, which is a little more than I was aiming for, but it's fine. The minimum investment is £50, which makes reinvesting easier, and it should be fine to start with a £50 investment, which is significantly lower starting point than the almost daily dividends. Also, just to note, this doesn't mean it's a recommendation to buy any of the stocks on an individual basis, and it should be looked at as part of a portfolio on aggregate. Due to the way pies work, it isn't a comment on the current value of any of these particular picks, and is supposed to be held long term. Generally speaking, holding equities in this way should be with at least 5 years in mind. After making the previous pie, I've learned some tricks about what kind of things you guys want from a pie like this, and I have delivered. By the time this pie and video goes live, there should be a fully viewable spreadsheet showing the holdings and current yield, number of payments per year, and the allocation breakdown. It won't be editable, as that has been a nightmare for the dividend dashboard, as people try and change it or stop others viewing it, or just mess it up in general. A real tragedy of the commons type situation, so I won't be making that mistake again. The spreadsheet is viewable for everyone with a link. Don't ask to edit it or you'll be banned, as it's super annoying. On top of that, I'll write out the transcript for this video, so it's easier to translate if you're not a native speaker of English, or you just don't like my accent, and it'll be hosted on my website. And there'll be a dedicated room or channel in the Discord to discuss the pie and ask questions or just keep up to date with any changes that there might be. So that should be pretty useful for those of you who are considering copying this pie and give you an insight into how it all works. If you have any questions that haven't been covered in the video so far, then very welcome to post either in the Discord or on the pie and Trading 212 itself. If they get asked frequently enough, I can make a FAQ for this to help future viewers too. And finally, before I leave, I do just want to say one thing. Although there are advantages of investing only in UK stocks, such as lack of currency fluctuations, no FX fee and no withholding tax, I do hope you will at least consider investing outside of the UK too. Over the past few years, the US has generally outperformed the UK by a wide margin, as shown in the graph below, and restricting yourself to just one market may hurt your returns if you don't diversify. That doesn't mean the UK can't come back to overtake the US, but it also means it might stay lagging behind. Who really knows? Just one more thing to think about. Let me know what else you want to know about this pie in the comments here on YouTube or in the pie comments on Trading 212 itself. If you liked this video, and if you made it this far, I'm guessing you probably did, then I have some good news for you. I'm giving away my PDF guide to the 10 dividend investing commandments, or the criteria that I use to pick dividend paying stocks, and I'm giving it away to you for free. All you need to do is submit your email in the link below and it'll get delivered to your inbox straight away. Again, that's for free. But that's not the only benefit of joining the email. You also get updates on the almost daily dividend portfolio, interesting stock ideas or news, and special deals and free stuff that I can share with you. Thanks for watching, and I hope to see you on the next video. See you!